It seems as Bitcoin has hit a roadblock. It has been pushing sideways now for about 24 hours with no directional move to be seen yet. We're going to be discussing the short-term price action as well as the macro to try to figure out when this next move will occur and where to. Let's go ahead and dive into the video. Okay, what is going on, Mega team? Welcome back to the channel, guys. Thanks for tuning into today's video. We're going to go ahead and take a look at Bitcoin today. And we saw that breakout of the descending channel to the upside, but unfortunately it didn't really develop into anything significant yet. We're still going ahead and developed some sort of sideways consolidation just above that gray box at 16,800 horizontal support. Now, before we get into it, guys, smash the subscribe button, hit the like button, and comment below if you have any questions, or if you just want to leave a comment, leave it down below. And of course, guys, join the Telegram channel, link in the description. You can see at the bottom over there. You'll get access to all of our charts, analysis, videos, updates, and all the important relevant stuff you need to know to keep up to date with the market. It is in here. Let's go ahead and dive into the video. So let's start with the basic stuff, the usual stuff. Market data. Let's take a look. November, currently on the month of November, we're down 17.71. It basically hasn't changed. We really haven't seen too much price action in the last 24 hours since our last video. Again, volatility's remained the same. We've basically remained the same here on the percentage. We've moved around 0.6% downwards since our last video. And of course, liquidations are very, very low. We're taking a look at 52 million in the last 24 hours. There really isn't much trading going on. This is quite low for cryptocurrency. Generally, we see a little bit more volatility in terms of the price action. But as you can see in the chart over here, in the last 24 hours, we've pushed in a very tight range. We're looking at like no more than 2%, generally about a 1% move. We take wicks and eliminate these couple, what we call volatile wicks over here. These data points that just move upwards aggressively from the overall trend. We're more or less just pushing in this sideways consolidation, sitting right on top of that gray zone, which is at 16,780 to $16,830 range. So the question is, how long will this sideways consolidation continue for, and what directional move will occur once it does actually end? So before we get into it, guys, let's look at the overall market. So first and foremost, DXY is very much in the same place again. It's a weekend, so DXY is going to be moving. It'll be very interesting to see how the DXY opens on Monday, where it actually does open at, because we have been dropping quite aggressively now. We've been pushing downwards for a couple days, and interesting thing to note, we do have the Dow Jones at major resistance, being at $34,000 level, and we have the S&P 500 pushing just past that major resistance, sitting at around, obviously, 3,975, and breaking just above that psychological resistance of 4,000. So it's going to be very interesting to see, guys, how that next candle is going to open, because that next weekly open is going to pretty much dictate where the market will be moving for at least 2 or 3 days, because we are in a very critical spot here in S&P 500, obviously smashing through some good key resistance levels, but more importantly, testing that 4,000 psychological resistance, and obviously the Dow Jones testing that major 34,000, which is a huge resistance. Along with that, guys, DXY has crashed down. So of course, if we do see some resistance there, we could potentially see the DXY move upwards a little bit over the next few days once it does open, and that could give some relief for the US dollar, and we could see the markets continue downwards. So it's very hard to say exactly what's going to happen right now with those markets closed, but you have to kind of be patient and wait for those to be opening. The bond yields did see some sort of potential reversion point over here, or reversal point. It did bounce over here. It'll be interesting again to see how those continue when the week opens. If those do continue upwards, we should see the DXY again rise upwards and cryptocurrency continue downwards. So very interesting to see. And I think the market is more or less waiting to see how the rest of the markets react. And that is why over this weekend, we've seen basically no movement. We're more or less waiting to see how the rest of the markets react, and we're going to kind of follow suit a little bit with that. So let's take a look at it. So we had this downward descending channel, which we did break out of, and it was a measly break, guys. It was pathetic. We had this pathetic break. Realistically, from that break point, we saw a 1.8% move upwards. We're currently up around 0.6%, but we've pushed sideways. So I'm going to go ahead and delete these lines now, and we're going to go ahead and draw in some new structures. So go down to the 30-minute chart. Let's try to see what structures we have developed. And what I'm seeing here, I'm seeing one of two things. I'm seeing a ascending triangle formation, a possible ascending triangle formation, which you can go ahead and draw out over here. Obviously, this was a huge outlier. This is when we broke out of that wedge, out of that wedge resistance. And another potential formation is, of course, a symmetrical triangle. Now, the symmetrical triangle can be drawn a few ways. Today, we're going to go ahead and use that peak and draw it across over here. That is going to be our symmetrical triangle. Of course, that does actually line up with our resistance point here. It lines up with our resistance and resistance. Now, we would know already, guys, that symmetrical triangle formations, pennants, they are generally, they're neutral patterns. They are neutral patterns. Now, obviously, that ascending triangle is a bullish pattern. We expect that continuation upwards. But this pattern is a neutral pattern. Now, the directional break on this is generally the direction we enter from. Now, we entered from the top side in, and therefore it can expect a move downward again. But again, we're not confirming that this is the structure. There is a chance that this is actually a symmetrical triangle, and that is, of course, this level here. So obviously, this is what we do when we have two overlapping patterns and we don't really know which one is which. We take a look at where these patterns line up and we say, okay, where is that symmetrical triangle resistance sitting? Well, we can go ahead and accurately draw it in over here. It is sitting at this level. Where is that resistance of the rising triangle or the ascending triangle sitting? Well, it is sitting above that pennant. So here's the thing. If we break out of this pennant, we're waiting for a break of this level here for entries, okay? And if we don't break out of this pennant, well, we do expect that continuation downwards based on this structure, okay? So in the short term, guys, we're not really making too much decision right now in this range. We're waiting for a break and loss of this gray zone, a break and loss of this uptrending support line, or a break over this green line to confirm a continuation upwards. So where can the continuation upwards take us? We'd be looking for very, very obvious points of rejection. So key points such as previous highs. You can go ahead and draw in some support resistance zones at these levels. You're looking for a first zone at around 17,000 to 17,100. That being that major confluence point, support resistance point that we retested numerous times already. Pushing past there, we're basically drawing that one up. So it's going to take us up to 17,200. We can see a similar thing occur here. And obviously, the more obvious point, 17,600 being that June low. On the downside, guys, we don't have much happening down over here. We've developed a little bit of support along the way, but not too much. Again, we're more or less just looking for these points where we do have support, such as over here. We have support over here, again, pushing through here and here, and losing that, of course, we don't really have that much. Under that point, we'd be expecting that continuation downwards. So in the short term, guys, nothing too interesting is happening. We really are just waiting for those traditionals to open. Now, I would say it would be wise to wait until the rest of the market opens up, until you start trading much, or particularly trade with a lot of money. Because right now the market is very much just waiting. It's on the sidelines, not a lot of volatility. It's a long sideways chop zone. You can get chopped and faked out pretty easily in this range. It's better to wait for the rest of the markets to open up, see the direction of those traditional markets, see how the US dollar's looking before we kind of make these directional moves. But the next directional move, like we just determined and like we just said, would occur to the downside based on those validations, or to the upside based on the validations we just showed you. So let's go ahead and take a look at Bitcoin dominance, something we haven't looked at quite some time. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to BitGet with the link down below and join myself and all of our other VIP members and other members who trade on BitGet daily. There's a whole range of benefits and features you can actually get by trading on BitGet. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the Mega Whale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially get paid to be on the exchange. That's enough, guys. We'll get back into the video. Now, Bitcoin dominance did actually push upwards and retest this 42% zone, but we did get rejected. That was, of course, October. We've been pushing down ever since for about a month now. We are pushing into this this danger zone. And this is the zone we kind of call the danger zone, or the golden zone, where we kind of come down and retrace to most of the time. This is where we end up around at around 39% to 40%. And generally every single time we come into this zone, we see a pretty large reaction in the cryptocurrency market when we generally break out of it. Whether as we break out of it and we head down, if the selling pressure is down, obviously, remember this was January, had a pretty big down move in January. This is September. We had a huge rally in the cryptocurrency price in September, and of course pushing back to May, we had a pretty big drop down in May. So we generally see big moves when we come out of these ranges. And if you go even to September over here, you know, we saw a pretty decent move in September for the cryptocurrency market, back upwards, we're claiming some pretty decent levels. So we generally see a pretty decent move when we kind of move out of this range, whether it's back to the upside or, you know, we wouldn't like to see it move down. We haven't really seen that before, and I don't think we're going to see that move down below this downward trending support. Of course, this is a falling wedge pattern. We do expect a breakout to the upside at some point. The total cryptocurrency market cap has very much remained almost the same. It is reflecting the Bitcoin's price action right now, which is of course a rejection from this level and some degree of continuation downwards. As we've said before, guys, if we do a measured move of this entire structure, it does actually take us to a target of 400 billion. And 400 billion will take Bitcoin, if we go ahead to our larger time frame chart, which is this one over here, it will take us down to about 12 to 13,000, potentially even a little bit lower at 11,000. The range is about 11 to 13,000, hence why we have gone ahead and pointed out we're looking for around 12,000. Now we do have this downward trending support line, which we did find a lot of support in January, particularly in June and May 2021, which is that almost that bottom point for that drop down, as well as the June absolute low on the 16th, and of course potentially where we're going to bottom out again at 13,000. So we're looking for that trend line. A potential retrace on a trend line would be very, very ideal. Looking at the Gaussian channel over here, it makes sense now. We got rejected from that Gaussian channel on the 3-day chart, unable to push into it. We'll be looking for a move back in the Gaussian channel on the 3-day chart. That'd be ideal. On the daily chart, again, rejecting from the top end of that Gaussian channel, as we saw very, very similarly back over here in April. We saw a very similar rejection and fake out over here in the last 2 weeks, and I was in early November, so about a week ago. And of course, the 50 EMA doubled down as that resistance on the 2-day chart. So it's looking okay, guys. I think be patient, be calm, wait for the next few days, see what the traditional markets do. But obviously, we've given you a pretty good understanding of what could happen here for the price action and giving you our triggers for those moves. But I don't expect anything too major to occur until maybe the next 24 hours when the traditional markets open up. We see the market for what it is, see the strength of the markets, see the strength of the dollar, see where the DXY is going, kind of understand that a little bit better, and then see where the market takes us. Okay, that being said, guys, I hope you enjoyed today's quick and sharp update. We'll see you guys tomorrow. Cheers.